In today's video, I'll be showing you $50 per day crypto trading strategy. This strategy works on any time frame and any pair, and it is useful for any trading style. So definitely watch this video to the very end. If you are new to this channel, please support this channel by leaving a like for this video, subscribe to the channel, and turn on the bell notification so that you receive update like this anytime I upload a new video. Also check the channel for other crypto videos and educational content. Let's dive right in. $50 per day trading strategy. This is very important, and what you need to do is to follow these rules to properly apply this strategy. The first one here is identify the market trend on the higher time frame with simple moving average. The second thing you must do is look for market entry on the lower time frame using divergence with MACD. And the third thing in this strategy is use trendline breakout as entry confirmation 1 and use BOS, okay? So break of structure as entry confirmation 2, and your stop loss is slightly below or above the previous support or resistance. What this means is your stop loss is slightly below the previous support for an uptrend and slightly above previous resistance for a downtrend. And the last thing you must do for this strategy is your take profits have to be 2 times your risk, which is 2 times your stop loss. This is all you need to do for these strategies. In this example, I'll be using ETH USDT, and I'll be using the 1-day chart for my higher time frame, as you can see right at this point, and the 4-hour chart for my lower time frame. So the first thing on the strategy is you identify the market trend with the higher time frame using SMA or the moving average. On the 1-day chart, I will put on the SMA or the MA, which is the same. So I'll put on the MA here, and then I have to change the setting of the MA or the simple moving average in any case to 70. Okay, so 70 period is what we'll be working with to properly identify the market trend first of all on the 1-day chart, and I will go back to my 4-hour chart, which is the time frame I want to enter my trade. So I'll go here as well and put the MACD because that is a second rule in this strategy. If you look at it right here, look for market entry on the lower time frame using divergence with MACD. Okay, so that is what I just did right here, and then the MACD is already on my chart. So what I will be doing right now is to look for buy opportunity on spot or long opportunity on futures, and the reason is because the moving average on the 1-day chart, which is our higher time frame, is indicating that the market is moving to the upside. We see this very crossover from this point and market begin to move to the upside. So it means that market is trending upwards. So we will be looking for buy opportunity on spot or long opportunity on futures. So once this is done, the third thing in this strategy is to use trendline breakout as entry confirmation after we've looked for divergence. So after I look for divergence on this very chart, then I will begin to look for where I see break of structure and trendline breakout. So as you can see right at this very point, there is a divergence on this very area on the chart. We see a perfect divergence on this very area. You know, the first rule, we've already seen that the market is moving upward, and then the second rule in this strategy is lower time frame divergence with MACD. So that is what we want to do right now. So at this very point, we see a divergence. If you connect these 2 points on the price action from this very area right here to this very point, see the market is sloping downward on the price action right at this very point. If you connect the same point on the MACD histogram, it is called that the market is sloping upward. Okay, so market is moving from this very point upward a little bit. So there is a divergence, and this divergence is a bullish divergence, which means the market is going to move to the upside. So from here, the third rule is for confirmation. So we want to use trend line breakout as entry confirmation 1 and break of structure as entry confirmation 2. What that means is you have to draw a trend line to confirm this very divergence. So we draw a trend line from here to this very area. So this is where the market breakout of this very trend line with this very candle right at this point. Then afterward, market move upward. The entry confirmation 2 that you need to pay attention to right here is break of structure. Okay, so as you can see right here, market move down and then move up a little bit, break this little resistance that we see at this very point before this very move to the upside. So once these two conditions for confirmation is reached, we can now take our trade and place our stop loss and our take profit target. So from here, you enter the trade at the formation of this very candle. So the formation of this very candle, and your stop loss have to be below the previous support for an uptrend. In this case, your stop loss have to be slightly below here, and your take profit have to be 2 times your risks, okay, in this very case. So if you look at this very point, you discover that the market from this very point to this very area is our risk, and from here to this point is our target, and our risk is 5.18% and our target is 10.74%. So this gives us an accurate 1 to 2 risk reward ratio. If you look at the rule here, the LCL have to be below the support for an uptrend, and your TP have to be 2 times your risk. So this is very, very simple. So this is the first example for a buy opportunity on this very time frame 4-hour chart and ETH USDT as my entry time frame. And if you look at this very area, the 1-day chart as my trend identification with the SMA or the MA as the case may be. So you must follow this setting of 70 period moving average. To take a short position on futures with this strategy, you have to confirm that the MA is above the price chart, and we can see that right at this very point. This indicates that the market is coming back to the downside. So from here, we can go back to the lower time frame, which is a 4-hour chart, to look for divergence and trade confirmation. So if you go back here, we discover that the market was moving upward in this very case. And if you look at the MACD, market was coming back down. So if you connect this point from here to this very area, and you connect the same point on the MACD histogram from this point to this very area, you discover that there is a divergence, and this is a bearish divergence. The next thing you have to do in this very strategy is to confirm this trade, and your trade confirmation number 1 is to place a trend line. So trend line breakout, which is what we see right here. And then the next thing we see again is a break of structure of this very little support at this very point with this very candle right here. So on the formation of this very candle is where you're supposed to take this very trade to the downside. So if you take your sell 2 from this very point, you discover that this is your entry at this very point, and your stop loss is at this very area, and you are looking for 1 to 2 risks reward. Okay, so from this point down here will give you 1 to 2, because from here we have 1.92% for the stop loss, and the reward right here is 3.51%. This is a clear example for a short position with this strategy. If you look at this very area as well on the same pair, the same time frame, you see the market was still going back to the downside on the higher time frame, which is the 1-day chart. And if you go back to the 4-hour chart, we have a clear divergence here as well. So if I connect the same point from here to this very point on the chart, and I'll connect the same point on the indicator from this very area to this very point as well, you discover that there is a clear divergence, which is a bearish divergence, which means that the market is going to come back to the downside. Breakout of trend line. Okay, so market breaks out of this trend line with this very candle right at this very point, and we want to see a break of this very structure of support. So that happened with this very candle. So you're placing the trade after the formation of this very candle right here. So if you take your sell 2 at this very point and place after the formation of this very candle is at this very area, and then your stop loss have to be slightly above this very point, which give us 5.6% as our stop, and our take profit target have to be 2 times that very amount. So you discover that the market move in our favor. We did not get up to 1 to 2 risk reward ratio, but in this very case, when the market move in your favor gradually, about 50% of your risk, you have to take your stop loss from where it is right here and shift it back to break even at the point of entry. In that way, if market whipsaw or turn back against you, you don't have to lose anything. So in the case of where the market moved down and could not get to your target, always move your stop loss to your entry once you are in 50% profit from where you enter your position. This is very important to the strategy, and as you all know, no strategy in the market is 100%. This strategy works 80 to 90% of the time, and you have to check it out and put it in your trading methodology. With a $500 and 2x, you will make $50 in a day with this very strategy for both long and short position, or for buy opportunity on spot. So this is very, very important. So this is how you can make $50 per day with this crypto trading strategy. If you are new to this channel, please support the channel by leaving a like to this video, subscribe to the channel, and turn on the bell notification for more updates like this. Also check the channel for other crypto videos and educational content. Also check the channel if you want to register on Binance, OKX, and Bybit. Thank you for watching to this video, and I will see you in the next video.